terms of how we're orchestrating our resources, how we're setting up our infrastructure on the utility side to deal with this influx of data that we're coming in. And I think the foundation of it all is really the customer. And that's actually the most interesting piece, right? I think every single conversation yesterday, at some point or another, really just put the customer as the focal point of it all. So I think that's probably a theme that's going to continue into today. And I hope that is something that comes out of my presentation today as well, right? So again, thank you all for being here early. Thank you to all of you watching live on GTM Squared. We'll see how much time I have left for Q&A, but just in general, keep in mind that throughout the conference, those of you watching at home, those of you in the room, you can log on to gtm.cnf.io and ask your questions. So yeah, let's continue and let's learn a little bit more and create this kind of shared understanding that we're trying to. So today I'll be speaking about grid edge investments and M&A activity. And just as a caveat, even while we've been here today, our numbers have changed from what you will see here just because of a few deals that have already been announced while at this conference, right? Even this morning. So just putting that caveat out there that my numbers will look a little bit different. But that is a fantastic thing, right? It shows you how fast our industry is moving. And just us being in this one event today, we've even seen several announcements in the last couple of days. So with that, who do we see as investors in the grid edge, right? We have to draw boundaries somewhere as to who is investing in the space. And in our practice, we have actually bucketed these investors into 4 different categories, 3 of which we consider strategic. And just as a note here, the folks that are up in these buckets are just illustrative, right? There's nothing about ranking or size or anything like that. So our grid edge investors, we started tracking this data deeply in 2010. So we've seen strategic oil and gas investors to the tune of, BP, Chevron, Equinor, previously Statoil, Shell, Total. Who do we see as strategic utility investors? EDF, Energy Impact Partners, is kind of the consortium of utilities that are bucketing their money together to make investments. Exelon with Constellation Technology Ventures, Innogy, NextEra, this is kind of a global play. Same thing on the strategic vendor side, right? ABB, Mitsubishi, General Electric, Schneider Electric, Volvo. And of course, our kind of traditional investors that we think of in the space on the venture capital side, private equity, investment banks, and other financials. So in our database, what we have actually tracked in terms of the number of investors that have made deals in the grid edge, and I will show you kind of the buckets where we actually see the investments in a bit. But we've tracked 10 strategic oil and gas folks that have made investments, 41 strategic utility investors, 73 strategic vendors, and over 1,400 folks from the finance community. And I think that's kind of interesting. One of the interesting conversations I'm having recently is with folks that are raising funds to make climate positive investments. And actually the most interesting part, because I do this coverage on the grid edge, is really kind of the focus on how they're looking into this space from a purely opportunistic perspective, right? I'm actually kind of curious from the folks that are in the room. I'm going to show you a slide later in terms of the breakdown of the number of deals that these folks make. Who in the room thinks that in terms of number of deals, it's the oil and gas majors in recent years that have kind of been leading the pack? Not that many. All right, strategic utility investors. All right, not that many. Strategic vendors. A few there. And then what about your traditional financials? All right, so that's where you're all seeing kind of most of the confidence. So yes, kind of traditionally when we started tracking the space, the traditional financial community has come in and made the majority of deals. But what I really want to point to here is obviously we've all heard about the activity from the oil majors recently, and I think that's going to continue to help animate the activity in this space. But what I really want to highlight here is actually the activity from the strategic utility investors. And for me, I think this actually really ties into a lot of the conversations that we have been having in the last 24 hours, right? And I think when I think about kind of the energy transition at large, I really actually do see utilities as kind of at the center of it all as we're trying to decarbonize, right? They're going to be the ones that are going to put the bulk power renewables in place, and it's going to take time. They're going to be the ones to put the distributed renewables in place and help customers make the investments behind the meter, right, in one form or another, either as directly servicing them, providing the interconnection and all of that. But I think on the other side of it, what we're seeing, I think traditionally I would consider kind of utilities as passive consumers of technology in some ways. They need a solution, they put out an RFP, a bunch of vendors come to them, they choose something. But I think what this is showing us is that these deregulated arms or these practices are really going out there and sourcing technology and actually kind of looking into the future of what the needs of the utility will be and being active in this conversation. In my panel yesterday, one of the things that we talked about is actually the importance of pilots. I think vendors always talk about actually wanting full deployments, but piloting is also very important for proving out technology. It's important for proving out business models. And also when you go to the regulator to ask for that full project, we get it right? Because we all know that a regulatory process is a 3 to 5 year process. So actually seeing utilities actively invested in innovation really tells us something about how kind of focal they are to what we're trying to achieve as an industry. So that's kind of my view on it. Happy to chat about it further. So in terms of what we've tracked, since 2010, it's $11.6 billion in venture capital and private equity, and over 1,000 deals to date, right? And just kind of looking at how we're looking at this space, we're bucketing it into advanced metering infrastructure, customer energy management, DR services, distribution automation, electric vehicle infrastructure, and I think that's actually one space where we're probably going to break it up even more. And I think kind of electric vehicle infrastructure may not be our right term anymore, it's e-mobility broadly, right? Energy storage, grid edge customer analytics, grid edge network analytics, utility back office, and utility network operations. And I think what you can see over the years here since 2010 is obviously, that kind of big red in energy storage. That's kind of a focal point, and that will probably continue as we continue to see kind of regulation and markets open up and prices come down. And of course, the other piece that's evolving here is on the e-mobility side. And of course, that other bucket that it has kind of been consistent in growth is really that customer energy management piece, right? And then let's look at that cumulatively, right? So when we look at kind of the cumulative investment that we've seen, we see about $5 billion of that in energy storage, and it will continue to grow. 1.5 billion on the e-mobility side. The e-mobility side is really interesting because we've actually seen a lot of early exits in the space where you wouldn't have traditionally seen that, but it kind of shows you at the pace that this industry is moving. And 1.5 billion of what we've tracked, actually 700 million is Amazon's investment earlier this year in Rivian. So just to keep that in mind. And then on the customer energy management side, we're seeing kind of nearly 3 billion. And I have to say, that number has changed since we have been in this room. So it's getting closer to that $3 billion mark, right? And actually, this is a conversation that we've been having in the last 24 hours, right? I think we've all recognized the value of storage, both front of the meter and behind the meter, the opportunities it poses, but also a lot of the challenges in getting this online, both from an infrastructure perspective and also from a financing perspective on both sides of the meter. Electric vehicles are, the greatest opportunity, but also the greatest unknown and potential threat, right? So kind of seeing the investment community getting going here to make sure we get this right is really important. And of course, kind of the customer energy management piece, right? And this is really important as we've talked about this like foundation of the customer at the center of it all. And seeing dollars consistently being spent on this piece is kind of critical to what we're trying to achieve, you know, that better service, that evolving relationship. So with that, as most of you might know, what I cover and kind of as my sweet spot of research on our Grid Edge team is really looking at how DR resources in aggregate participate in wholesale markets. So in plain terms today, that is our traditional demand response, that kind of 32 gigawatts of flexibility that participate in our wholesale markets, right? And today, what does that look like? That looks like manufacturing, it looks like HVAC control, it looks like fuel-based, backup generators, that is diesel, that is gas, right? Lighting control, electric water heaters, miscellaneous loads, and small part batteries, right? What we're evolving to, as we've talked here today, is really looking at the growth opportunities and flexibility of EV charging, obviously, a lot of batteries, connected home, and kind of these isolated parts of our grid, the microgrids that we're bidding in aggregate. And hopefully that kind of optimization taking place. And I think where the evolution is really taking place is really looking at the portfolio optimization and kind of blurring that line up front of the meter and behind the meter, and really looking at that kind of true virtual power plant aggregation, where we're looking at optimizing our system as a whole. Really looking at having demand follow generation, right? And especially as we're getting into more renewable generation, adding a little bit more, and at times a lot more intermittency, having that optimization layer is key. And that really actually comes from this, what we've called DERMS, Distributed Energy Resource Management Systems community, the demand response management systems, DR services at large for that VPP optimization. But what I want to highlight is really that kind of secret sauce of orchestration and the software layer. And what I actually want to highlight here in terms of the investment activity in this place, so out of that $11.6 billion that I talked about earlier, 1.9 of that has actually, and the disclosed value has been spent on these types of platforms, this software layer, right? And in the disclosed deals that we've tracked, we've actually seen this kind of sweet spot for investment in deals at kind of that under $30 million mark, and really that like $5 million mark. So this kind of shows you the size of the deals and these types of companies. And I have to say, this space is getting increasingly crowded, right? And it's turning into a space that traditionally we've had our demand response providers, right, or our Enernox or C-Powers of the world that have played into markets, but have really gone into these wholesale markets to get shared revenue. But what we're seeing evolving here, especially in kind of the startup community, is really just looking at that software layer and providing software as a service versus going to market for those shared revenues. And that market is getting crowded, and that money that you can make in those shared revenues is really tight. So we're really kind of seeing this evolution on the SaaS side, and essentially looking to folks that are already participating in markets to license the software, to bid in their flexible portfolios, and not looking to get a piece of the pie. So again, I kind of really wanted to show this kind of clutter of where the investment dollars are, and we see these kind of two outliers here on the over $100 million mark, and one of them, just to highlight, is STEM's Series D. That's, I think, at like $110 million, right? So that's kind of the investment side, but obviously we've seen some consolidation in the market as well in this space, and this is really kind of, we've tracked 38 deals in the space since 2010, 12 of which have been disclosed, ranging between $300 million and $4.8 million. Just to give some numbers there, again, into kind of the range of the M&A activity in the space. And one of the things you can't miss on this chart is the 2017 activity that took place, and that kind of $665 million plus activity. And I just want to highlight some of the deals in this space that I'm sure we're kind of all aware of, but just to show what happened in 2017, right? We had Centrica acquire Restore, and kind of since that point, in, plugging in that orchestration piece, you saw this formalized practice come into play of Centrica Business Solutions, essentially, looking to service C&I customers as a whole. And I have to say, they've even had more M&A activity, even this morning, announcing an acquisition in SmartWatt for, I think, $37 million. So, like I said, this is all outdated, even as of this morning. In 2017, we also saw Enel building out their flexibility practice, looking at their acquisitions of Demand Energy on the battery storage optimization side, the acquisition of Enernoc on the demand response side of things, and then on the acquisition of eMotorWorks, looking at that flexibility of electric vehicles. And then Itron's acquisition of Converge happened that year. Ormat acquired Viridity Energy and Shell. I think this is when we kind of saw this catalyst of the acquisition spree with the acquisition of MP2. And again, like highlighting this piece of flexibility as a key component, right? And what I really started to see around 2017, where I really started looking at this space, was really the European majors, coming on into this space with really this like aggressive shopping spree, as I call it. And you're really seeing this 2017 and 2018. I'm not going to go through each and every one of these, but what I do want to show in this very, very cluttered slide is that from 2017 and all the way through kind of Q1 of 2019, you've had 41 deals that these majors have made, both in acquisitions and in investments. And it's not stopping anytime soon. And I think from what you can see in terms of kind of the categories, you're looking at demand response, we're looking at e-mobility, we're looking at storage, we're looking at transactive energy, and it's really just playing into that flexibility space. And that's actually continuing into 2019 as well. And like I said, this is out of date with Centrica's acquisition announced this morning, which is great. So again, that 5 turns into a 6. And we can see that it continues, right? And it continues into this flexibility space, into servicing customers. So just to highlight where the acquisitions have taken place from these, where these deals have taken place from these majors, 13 have been on e-mobility, so really kind of one of the focal points that I think we probably touched on almost every single panel, right? Demand response, that flexibility side of it, and being able to orchestrate all of these resources behind the meter, and increasingly so in front of the meter. And again, on the energy storage side, right? That opportunity for both front of the meter and behind the meter that we see. So it's nice to see that where we're seeing the M&A and VC activities really in a lot of the conversations that we have been having here today. And of course, I don't think that we can have a conversation like this without looking at what Shell is up to, right? And I think this is just the activity that they've had since 2017. And I think a lot of us in the room have heard that Shell is really trying to become the biggest power company in the world by 2030, right? And it's really interesting for me to see how they're just looking at this retail piece and that flexibility orchestration piece, right? In terms of who they've acquired. Look at, MP2, a retailer / demand response provider out of Texas. Look at Greenlots, looking at kind of that e-mobility optimization. Sonnen is a really interesting one because they're both an energy storage provider, but also in Germany, their main market, they pool their resources together to also participate as a retailer, right? So in theory, you could say that Shell has made bids so far in 3 retailers servicing residential customers. And another announcement that they made earlier this year was that in the Netherlands, or home market, they might be bidding for Eneco, one of the largest retailers in the Netherlands as well. And for me, like seeing kind of their demand response play and this flexibility play, you're really kind of seeing a strategy come into play here. So Shell's grid edge shopping spree, what does it kind of mean? In a few ways, right? So a couple of things that I'm seeing here, again, coming from that European model, coming from the Netherlands, which having kind of studied those markets, I can tell you is kind of the model of deregulation, where you have retailers that own generation to directly service customers, right? So you kind of see Shell inching in that direction, right? They're building up a renewables portfolio, and they're building up a retail arm to go to customers, in addition to building out services, right? Here in the US, they've announced partnerships in place to actually service C&I customers directly. They recently just announced a partnership in Canada for that energy storage piece as well. So what we're seeing is Shell diversifying their portfolio. And again, that $1 to $2 billion spend that they're making is not big for the oil and gas industry, right? For every $1 to $2 billion that they make in kind of the renewable sector at large, it's $30 billion in the oil and gas side. But as you can see, kind of our figures, even looking at the investment side, that is making a difference, right? They are kind of creating a catalyst, and if you do get the oil and gas community involved in actually making these investments, becoming part of the conversation, as they're also trying to diversify themselves, right? For our industry, this is big, and to help us move at a faster pace. So they're diversifying their portfolio and also kind of balancing to hedge their own market position. And I think that's where that flexibility piece becomes really important, because they can play in markets as a retailer with kind of having that co-optimization. When talking about servicing directly C&I customers, we're really looking at Shell as someone that can really take on risk for customers. So when looking at DR investments, especially when looking at storage, maybe customers don't want to own these assets, right? But Shell can do that for them, and they have that kind of patient capital that they can bring in. And again, be able to kind of optimize their portfolio with that. And again, kind of this like critical piece of being an oil and gas major, really, I think at this stage, even with them, building out a renewables portfolio, but also even on the gas side, Shell is a firm off-taker of fuel, right? They have this kind of strategic advantage of being able to guarantee price for a customer, which is kind of a key piece, right? Especially as we're looking at kind of energy-only markets, that volatility can really hurt customers whose bottom line really is impacted by their energy spend. So being able to provide that is kind of critical. And just overall on kind of the strategy, right? It's really interesting to see that in the last couple of years, like I said before, we've had Centrica building out their Centrica Business Solutions, the folks that are here. We've seen Enel building out NLX. We're seeing Shell coming into this as well, Engie, and the US kind of being a playing ground for them, or where they're really looking to grow. So it's really interesting that that's happening here. Another one of the questions that we kind of answer often, especially when you're seeing kind of, Google with their Nest activity, for instance, right, trying to get into the utility market, and it's always like, is Amazon and Google going to buy a utility, right? And I think that's kind of a question that's popped in our minds a few times, and the way that we answer that is like, they're not going to do that, right? Tech moves at a different pace than the energy industry, and you need to really kind of have that understanding of the regulatory process and what it takes to really get programs and work with utilities off the ground. When looking at the oil and gas majors, if anyone's going to buy a utility, it's probably going to be them, right? Because they do have that patient capital, they understand the regulatory process, and they are, in it for kind of that long term, whereas tech needs that kind of quicker turnaround to make the economics pencil out. So this is really interesting. I will continue to be tracking this activity, and maybe my thoughts will kind of evolve. But what I really liked about putting this presentation together was really seeing kind of the focal point of the M&A activity as kind of the focal point of what we have been discussing here. in the last 24 hours. So I'm excited to see where the conversation goes and the rest of the day today, and hope to continue talking about this stuff. So thank you all. Yep. So next up, we have a panel on utility digitalization. So